All right, welcome everyone who's listening to us live today for another great presentation talking about the precious metals market. We've our guest speaker we're having on today. We've had him on before many times. The last time I think was probably 6 or 7 months ago, and a lot has changed, obviously, with interest rates, the precious metals market. So we're happy to bring Greg back on today for our webinar, talking about really what the precious metals market looks like today, obviously the effect that these lower interest rates and maybe what further interest rate changes will have going forward on our particular market. Again, if you're listening live to us, we have a question box on the screen. You can ask questions during the webinar, type those in. We'll make sure we get those asked of Greg or myself as we go along. If you are listening to the recorded version, you'll have the ability to reach out to either Greg or myself. My name is Scott Maurer. I'm the Vice President of Sales at Advanta IRA. I've been here since 2006. I'm a licensed attorney by degree. I do not do any legal work for Advanta IRA clients, but that is my background. And so sometimes if you have some legal questions, I'm happy to wade into it maybe a little bit with you. My contact information is on this slide. So if you have questions, again, as we're going along the webinar today, either if you're listening live and don't want to ask it live, if you're listening to the recorded version, certainly here's how you can reach me, either by phone or by email, or just for some general information. You can certainly hit our website at advantaira.com. Just a quick disclaimer, Advanta IRA does not provide investment advice. We do not endorse any particular products or investment providers. We provide our webinars. We host these events for educational purposes only. We hope that attendees can come in, learn something, take what they've learned and apply it to their own portfolio, IRA, or maybe even a personal portfolio. But if you need legal, tax, or investment advice, we certainly encourage you to talk with your CPA, talk with your accountant, or we can also refer you to someone who's familiar with what you're looking to do, and also maybe even within the IRA realm as well. Just a little bit about our company for those of you who are unfamiliar with Advanta. We've been around for almost 20 years, so we currently hold over $3 billion in assets under management. We also really pride ourselves on our two things, our education, which is obviously the webinar we're doing today, but also the personal customer service, really this concierge almost level of service that you get when you have an account with Advanta. You get appointed to a specific account manager. That person will assist you with anything you need regarding your account, whether it's making an investment, getting your bills paid for an asset in the account. If you have questions on potential investments, we really pride ourselves, like I said, on that level of service that we give to each and every customer that we have. As I mentioned, we do a lot of educational events, webinars, seminars. We're active in the community at different networking functions near our Tampa Bay and our Atlanta markets, also our Charlotte market as well. So we try to get out to the community. Sometimes we're frequent guest speakers at those events. Other times we're just there to network and learn from others as well. This webinar today, like all of the webinars that we host, is being recorded. And we place all of the links for the recordings on our video library on our YouTube page, which you can link to from our main website. So if you want to, having a great presenter today who's been on with us before, you can go back and listen to some of his older webinars and see if his predictions, if his outlooks came true, and actually go back and look there. But anytime you miss an event or you can't make a live one, you can always find the recording on our video library. Now, when we talk about precious metals in an IRA, I always like to recap as we kind of set the stage for our guest panelists to come in. But precious metals in an IRA, there are some metals that don't meet the IRS-defined fineness requirements. You must have gold, silver, or platinum, or palladium, I believe, that is at least 99.5% pure gold, pure silver, in order to qualify it for an investment inside the IRA. Just because a coin was minted by a government, even the US government, does not automatically make it qualified for an IRA. Maybe that's something we can ask Greg about as well when he comes on. The different types of coins sometimes the US government prints, it kind of falls more in the realm of being a collectible. And again, IRS rules stipulate, the IRA owner should not have physical possession of the IRA owned precious metal. So if you are going to invest and buy gold and silver bars or bullion or coins within your IRA account, the IRA does need to set up a separate depository account where that metal is held. outside of your physical control. That is, on the IRS website, they're very clear that they deem that to be a prohibited transaction. There is even a court case, McNulty versus Commissioner, where an individual tried to get around that prohibition by forming an LLC, and as manager of the LLC, they took possession of the gold. But since that was still their IRA account in that court case, the IRS, the tax court said, hey, that is still prohibition against rules. So if you're going to buy precious metals through your IRA account, you're going to want to have a depository account. Advanta currently works, I think, with 8 different depositories that you can select from. And then although precious metals can be legal currency, you know, in actual gold or silver, American Eagle, you could technically use it as legal currency. You cannot use existing metals that you own personally as a contribution to your IRA. So if you have some coins laying around and you say, hey, I'd like to put those into my IRA, it doesn't work that way, unfortunately. Your contributions to an IRA have to be made in cash, and that cash then used to actually buy the metals or the coins. There are a lot of gold and silver dealers and brokers out there. We encourage you to do your due diligence on every dealer that you're working with, making sure you're satisfied with what you are paying for those metals. Each dealer is going to have a little bit of markup. That's how they make their money. That is their business model. But also some of them are very good and at figuring out which products meet that investment grade requirement that the IRS puts out there. So again, make sure you're dealing with a good, the gold dealer, gold broker. Do your research and you're satisfied with who you're working with. Again, in general, the metals typically out in IRA are gold, silver, platinum, and palladium, kind of in different denominations with U.S. gold and U.S. and silver coins. The foreign countries that are certainly allowed are Australia, Canada, and Great Britain. So if you are getting a coin minted by one of those particular companies, that will be acceptable within an IRA. Outside of that, again, you'll want to rely on your gold dealer, your gold broker to make sure that the metal they're selling you does indeed fall within the acceptable range of assets and that the IRS permits on within the IRA account itself. Some unacceptable coins, again, any type of rare or collectible coin. So something could be, 90% gold, but the fact that it's a rare coin and the value is significantly higher because it's rare is going to make it a collectible and therefore prohibited by the IRS. There are things called Dory bars, which are basically, I think, unrefined gold bars that also, again, are unacceptable because they're not meeting the fineness requirement. So again, with Advanta, you have it now with us. You can choose from several different depository institutions. I mentioned we have 7 or 8 that we work with. Certainly the gold or dealer and the depository that you prefer. So that's really just a little bit of the basics of investing in gold and silver through an IRA account. At this point, I really want to bring on our guest presenter. I mean, that's where you're going to get. I'm sure this is why you guys have tuned in today. This is the information that you want to learn about. We've had Greg on before. Greg is the founder of Allenhouse Metals that offers a purchase, sale, and offers storage solutions for precious metals as well. Again, he's been on our webinars multiple times. He always brings a fresh perspective. He wanted to come on again because we knew that interest rates, there was indication several months ago that the interest rates would be being lowered at some point later this year, maybe even farther on after this. And Greg wanted to come on and talk about really what effect that has on the metals markets in general. And also what you can do looking forward, going, either with the new administration coming in, or if interest rates go up, they go down, what effect that is going to have. You can connect with Greg here at his website. I think he's going to share his information as well with the presentation. I'm going to turn the slides over to Greg now, let him pull up his screen, pull up his slides, unmute himself, and then he can kind of jump in and share his information with us. Hey, Greg, how you doing today?
Good, thanks, Scott, and thanks for having me back on again. Like usual, these are always, fantastic opportunity for review with what's changing in the market, but also just to learn about precious metals and markets in general. Before I even get into it, I just figured I'd kind of expand on what you were talking about with IRA acceptable metal, because I think it's an important one. I know one thing that I always stress when we're talking to people is what you're looking to do is purchase something in gold or silver that is LBMA approved, meaning London Bullion Market Association approved. These products are all IRA approved. They all meet the fineness requirements. But the big thing is try to avoid coins at all costs where you can. The reason I say this is most dealers have exorbitant markups on coins. And furthermore, like Scott was mentioning, collector coins are not allowed in IRAs according to the IRS. So there are things, for instance, dealers that would even sell an American Eagle coin that's a proof coin. I'm sure people have heard the word proof. Proof by definition, those coins are made for collectors or as commemoratives. It's little things like this you have to be very careful with, and you'd rather find out in advance of making the investment than after the fact, right? So I guess just diving in here, before we get to any charts or anything like that, a big thing for us is, you know, there is no one size fits all approach to investing, right? No matter what you're investing in. We're not, you know, a coin dealer. We're not just your basic coin dealer. Our goal here is we want to understand your objectives and really help you create a tailor fit portfolio that best meets your investment needs, right? Whether that's capital appreciation, preserving your purchasing power. It's really important that whether you're investing in metal, stocks, real estate, anything across the board, you want to make sure that your allocation is set to what best fits your needs, right? So a little bit about us. We're a registered dealer with a company called Dillon Gage. We work exclusively with them. They are the authorized purchaser for the United States Mint, the Royal Canadian Mint, the Perth Mint in Australia, South African Mint, and many others around the world. You'll notice those are all the mints that were mentioned when we were talking about approved products. They've been around since 1976, and they're based out of Dallas, Texas. And this is really the source. We're dealing in they're importing in excess of $1.5 billion worth of gold and silver, platinum and palladium every single month. And they don't deal at the retail level. We are the ones that are distributing to people like yourselves through IRA custodians like Advanta IRA. And they also, I know Advanta works with 7 or 8 depositories. They own IDS Texas and IDS Delaware. It's a wholly owned subsidiary of theirs. What you'll notice, like, we can work with any depository. We find that we prefer to work with IDS Texas specifically. The reason being is IDS Texas is in the same building as the distribution facility that we use to ship all of the metal out where we buy and sell. So it makes things like buys and sells and liquidations a quicker process, because instead of shipping it, it's literally audited and moved to the other side of the building. Again, you'll notice that IDS Texas and Delaware are COMEX certified. They have ICE approval, and they are also LBMA certified. They have every certification known to man, and everything that's in the depository is wholly insured by Lloyd's of London, who have been the best names in insurance for hundreds of years. So moving forward here, I guess I get the question a lot, you know, what makes precious metals a true safe haven? And I think a big thing with precious metals we have to remember is they're guaranteed to hold their intrinsic value, right? They hold value and they rise in price with the cost of living over time, otherwise known as inflation, right? And the other thing that we see in precious metals is they can offset large portfolio declines, because in times of economic turbulence or geopolitical tension, while paper markets typically plunge in value, precious metals soar. Studies that we're going to see today and highlight will show that precious metals have consistently outperformed equities and real estate for over 50 years, and are not only just a safe haven purchase option, they can be a consistent earner in your portfolio moving forward. This is one thing I just wanted to highlight for everyone right off the bat, because we talk about things like a value hold and increasing with the cost of living. If you look at this slide here, you'll see the cost of a Corvette in 1971 was just under $5,500 if you rolled it off the lot, which at that time in 71 was either 135 ounces of gold or 3,572 ounces of silver. The cost of a Corvette in 2020 was just under $68,000, which was 38 ounces of gold or 3,300 ounces of silver. So you'll notice from 71 to 2020, the cost of the vehicle went up by roughly 12 times, but yet the amount of gold it took to purchase it was less than a third, pretty much a quarter. Now, if we want, and just to articulate my point, in the last 4 years since 2020, that same Corvette to purchase new off the lot has gone up in price by roughly $500. It's $68,300. But if we look at the cost of gold today, the cost of gold has moved up to $2,772. So if we take that $68,000 and divide it by the price of gold, it means today it would only cost 24.5 ounces of gold to purchase that same Corvette. And instead of 3,300 ounces of silver 4 years ago, it would only cost 1,975 ounces of silver today. So not only can you see that gold and silver have outpaced inflation from 71 to 2020, but if we look at it today, they have almost doubled in their purchasing power. Actually, they have doubled in their purchasing power just in the last 4 years, which is extremely significant. So getting into the meat and potatoes of what we're talking about, the big thing here, aside from just holding value and increasing with the cost of living, there is no credit risk, no issuer risk to physical precious metals. I know a lot of customers at Advanta invest in real estate. We actually have clients who have used their precious metals holdings to secure funding in the form of mortgages for property. There are no issuer risk whatsoever. And the big thing I would say is everything that clients purchase from us, even some things that clients purchase from other dealers and not us, we purchase it all back. There is no issues to liquidity. We make sure that you're moving out of cash and into metal and out of metal into cash as easy as it can be. It is a quick DocuSign with Advanta like any other transaction is, and it's completed. So I want to draw everyone's attention here to the dot plot. This is the latest dot plot that was released from the Federal Reserve last month, okay? What we will see in this dot plot is that the average of the Fed governors, the decision makers, believe that they see interest rates settling at the 4.25% mark this year. They see rates dropping another full percent in 2025 to 3.25%. And they see the rates settling in 2026 at 2.75%. The reason that this is so significant is because we are entering into a multi-year interest rate cutting cycle. This will have detrimental effects to the US dollar. It'll have detrimental effects to paper markets. It'll have detrimental effects, especially to bond yields, treasury yields. And so it's really important that we know how our portfolios will be affected by these moves in the market. Now, as we move on here, a big thing that I do want to point out to everyone here is as interest rates drop, yields and the dollar drop in value. And the inverse is also true. As interest rates rise, yields rise with them, and so does the dollar on the index. So the reason that we're so concerned, or rather so focused on the forward guidance and what's coming from the Fed, is because the number one thing that affects the price of gold and silver is the US dollar. Gold and silver have an inverse relationship with the US dollar. And what that means is as the dollar loses value, they gain value, and vice versa. As the dollar gains value, gold and silver lose value. It's like a seesaw, right? Now, when we look at what we're seeing today, we want to ask ourselves, where do we see the dollar moving from here? Because that's going to be the number one indicator. What I have set out in front of us here is a 5-year US dollar chart, okay? What I want to show, first off, you can see if we look at this dollar index at 100, the important technical level, if we look at that point on the arrow, you will notice this is the point in which we saw the pandemic declared and we saw interest rates cut in a hurry to 0% when the pandemic was declared. If we follow that process along, you will note that the dollar fell from that point at 100. It did reach the peak at 104 there in 2020. It fell from that level down to 89 on the index, okay? This is significant because when we saw that move down to 89 in the index, we saw major swings in the precious metals market. We saw gold move from $1,500 to over $2,000. We saw silver move from $11.82 up to $30. But what you can see happen with the dollar chart here, as soon as rates began to hike in 2022, we see the dollar whipsaw up. And now, an important thing to keep in mind, the chart we're looking at is the dollar index. We're not saying that when the dollar whips up here that your purchasing power is greater, because it's not. The dollar index is a chart that compares the US dollar's value to several other currencies, including the British pound, the Canadian dollar, the euro, the yen, and so on. And so what we see is we see the dollar go from 89 to 115 on the index. Now, if we look historically over the last 25 years, since 2000 roughly, the dollar has traded between a strong line of support at 72 and a strong line of resistance at 104. This has been true as rates have moved from 0 to 2.5%, which is what we saw happen in 2018, in 2020, in 2015, and before that as well. And so the reason that we see the dollar here peak above 114 and not stop at that line of resistance at 104 is because we saw interest rates hiked from 0 to 5.5% this time, not 2.5%, okay? Now, immediately, you'll notice coming to the end of this year on the chart where we come into 2023, as soon as rates reach what's considered the terminal level or close to that point and rates stop being hiked, we see the dollar fall right back into its normal levels of trading. You'll see it's been trading between 100 and 106 roughly for the last 18 months. Now, we expect as the interest rates are being cut, the dollar will break right back down to previous levels. Leading economists predict we could see the dollar move all the way back down to 72 on the index within the next 18 months as we see interest rates being cut. The reason this is significant is because we're currently seeing all-time high gold prices and 13-year high silver prices with the dollar elevated above 100. These really are, it's unprecedented, really is. So moving forward here from the dollar, we're going to look here at the 10-year Treasury yield. The significance of this chart, you'll notice there's a head and shoulder formation that is illustrated on the chart. The head and shoulder formation is considered one of the most reliable trend reversal patterns. So what this means is that the upward trend in US Treasuries has come to an end. It's a reversal. We have now seen the yield on the 10-year note drop from 4.7 down to 3.9% just this year. The significance of that is it tells us that what we're seeing in the dollar, not only is it not isolated, but it confirms to us that we are making the right move and that the dollar is moving in negative territory. And we know that because rates are being cut. What you notice here, you'll see the blue line leveled at 3.2% and then another blue line leveled at 2.5%. The firm belief by analysts and economists in the industry is that as we see rates continue to be cut within the next 18 months and 2 years, we will continuously see this 10-year yield drop to 2.5%. So what does that do? Well, treasuries are traditionally a point of safety. So what we're seeing happen is they're eroding the dollar as they cut rates. They're also eroding treasuries, which are a safety mechanism for a lot of people. What happens is as we see these treasuries and the dollar drops, the opportunity cost to holding gold becomes minute, almost non-existent. And it's because there is no higher yielding safety mechanisms to turn to. Now, what I want to direct everyone's attention to in this chart that we're seeing right here is this shows the cost of holding commodities as opposed to the S&P 500, as opposed to a stock. What you'll notice is that today we are at the lowest point in the last 54 years. In the two previous points in the pre-tech bubble in 2000, and also if we look at this point in 1970, 1971, if you were to hold precious metals at this point, you saw a return in excess of 400% within an 8-year period. This has only happened 2 times before at this scale. Now, just to expand on that part a little bit, what you're seeing here is branching off of that last chart with the opportunity cost. The belief across the industry is that just like in 1970 and 2000, we saw decade-long bull markets. And the chart shows that we're at the beginning of another one. These two charts were brought up by a gentleman by the name of Jared Woodard. He is a senior analyst and one of the heads of commodity research at Bank of America. Jared Woodard believes that we're entering a secular bull market for commodities alike, not just gold and silver. And Bank of America believes that this super cycle will carry us through the entire 2020s, the next 10 years. The significance of this is if you look at where we're at in the super cycle, we are not even 1/6 into this super cycle. I mention this because it is absolutely not too late to get involved. It's in fact the perfect time to get involved. The reason I mention this is we have a Fed meeting coming on the 7th of November, is the next announcement, followed by the 18th of December. We are in the perfect position where people are able to position themselves with a good average cost before we see the bulk of the surge in this market. Bank of America is actually so convinced that we're entering a secular bull market for commodities that they are recommending a 60-40 investment portfolio right now. And by that, what I mean, Bank of America usually recommends for ultimate safety 60% of holdings in stocks and 40% of holdings in bonds. Jared Woodard and Bank of America have actually flipped the script, and now they're recommending 60% in stocks and 40% in commodities like gold and silver. This is, and coming from Bank of America, this really is unprecedented. One of the statistics that Woodard uses to justify this perspective is if we compare treasuries to commodities across the board since 2020 and the declaration of the pandemic, Woodard states that commodities have gained 116% since the declaration of the pandemic. If we look at the 30-year treasury yield, it's lost 39% in the same period of time. So right here, I want to draw everyone's attention to what we saw happen with rates in 2008 and also in 2020. The reason it's important to note is attention to how we saw gold and silver react over these same periods. What you'll note in 2008, we had multiple emergency meetings and rates were cut to zero. Following rates being cut to zero, what you'll notice is from 2008 until 2011, we saw a move of 145% in the price of gold. Similarly, in 2020, if we look at the price log and the price of gold, we saw a return of almost 80% in a year-long period after interest rates were cut. What I want to expand on here is that when interest rates are cut, yes, the dollar does lose a bit of value almost immediately. But what you'll notice is as interest rates are not only steadily cut, as they remain lower and the dollar continues to deteriorate, you get consistent positive price action in gold and silver. It is not something that happens overnight, although lately it does seem like that. If you're looking at the gold and silver markets, it's something that happens over a consistent period of time. Now, if we look at this chart here, shows the last 3 interest rate cutting cycles with silver, okay? On average, between these 3 interest rate cutting cycles, we saw a gain of 413% in silver. And when we look at this, as Bank of America was looking at it as a 2020s commodity super cycle, what that tells us is we are right in line with this silver chart with what that decade-long prediction is. You see the decade-long prediction is in the neighborhood of 600 to 700%, which puts us right in line with what we're seeing on this chart. Now, I just want to highlight the slide in front of us is a combination of our February and our June webinars, okay? And what we saw at the start of the year is Gregory Shearer, the head of base and precious metal strategy at JP Morgan. At the start of the year, they were calling for $30 silver. They were also initially calling for $2,300 gold. If we look to the third section here in June when we met, gold had already surpassed the price target for JP Morgan by $149. And as I said today, it's sitting at $2,772. The reason I bring this up is the question becomes, well, where is gold headed from here? And you'll note all of these major banks have amended their price projections. The big ones we noted in earlier webinars this year was Max Layton from Citigroup. They were projecting $3,000 within 12 months from this past March. Michael Widmer from Bank of America was forecasting $3,000 in 2025. Both of these banks have now amended their projections. They believe the next place that gold will be heading is a price target of $2,865 for this year, for the year of 2024, with the potential to hit $3,000 this year. Ultimately, the next move once we're through 2865 is to $3,200, and we'll see that on this ensuing chart. If we look at this chart, it's very bullish. There's two important technical signals that we're going to see here. First things first, you'll see a bull flag target. Otherwise known, you can see things like a pennant pattern. What happens in a pennant pattern, like what's beginning to form here, is you get a period of consolidation within a certain price point of resistance and support. As that market consolidates and gets tighter and tighter, and the highs and the lows get tighter and tighter and tighter, think of it like pressing down a spring or a coil. The tighter it gets, when it lets out, or rather blows off, it explodes, or rather slingshots out of that target, which is why you might see gold trade within a set range for a few weeks. And then you look at the market and in one day it explodes right up into a new range. That's how we see it on the chart. And to expand on that bull pennant, what I want to show and why we're seeing the H&S target at $3,300 and the bull flag target at $2,800. If we look at this, it is a textbook cup and handle on the chart, an absolute textbook cup and handle from 2011 to the high that was seen at the end of 2020, start of 2021. The depth on this cup, if we look at this, is a total of just under $1,000, like $980. And if we look at a $980 cup, that would seem to indicate from the high that the next move here is to $3,000, which is supported by seeing the bull flag target at $2,800. Now, if we were to have the opposite on this chart right here, instead of a cup, it would show a bubble, and that would indicate a possible downward movement. This tool and these tools we're talking about on the charts, they are not specific to precious metals. They can be used across charts for any stock. So this is true whether we're speaking of Apple, Microsoft, Nvidia, or gold and silver, just like we're speaking on it today. Now, moving on, if we look at the silver price projections, JP Morgan at the start of the year projected that silver would move from $23, where we saw it, to an average of $30 in Q4. Furthermore, at the last webinar in June, we had silver prices at $29.52. As we're speaking today, we have silver prices currently at $34.58 as of this morning. And so the significance about $34.58 is we are in a whole new ballgame, a new trading range, as we've now broken out of the 13-year line of resistance that was set back in 2011. So as we move here, one thing important to note, and I do want to bring this up again from the June webinar, what is different about this rally than rallies past? And Daniel Galley of TD Securities mentioned this and highlighted it, and it was a very good point. In 2011, silver went from $30 to, the exact number was $49.82 in a period of 10 weeks. And so, like any healthy market, right? A healthy market does not move up or down in straight lines, right? It's always 2 steps forward, half a step back. What happened with the silver market is we saw it slingshot straight up and it came straight back down. Well, at this point, we are now talking about a market that has held a line of support at $30 an ounce for almost half of the year. It is a completely different situation. And so because of that, TD Securities specifically has adjusted their forecast for silver. They have a target price for silver of $42.47 for the beginning of 2025. First, we need to see silver make that move from 35 to 38, and then we will see the next one. The important thing I wanted to highlight on this slide, however, is that this rally is fundamentally different than the rally we saw 13 years ago. And we believe the prices will be sustained above these levels for time to come. So if we look at this silver chart here, again, not only do we have a head and shoulders pattern, but if you look in the consolidation range, this right here, and you'll notice on this chart was pulled last week just before we had this move to levels we see current day, and this chart forecasts it perfectly. What you'll notice is at the end of that head and shoulders pattern, we almost have what's called a pennant pattern forming in a tight range, and the explosion took us right up to this $35 point. But more significantly, what I do want to point out is just like in gold, silver has a multi-decade cup and handle as well. And if we look at the depth of the cup in silver is $38. And so if we look at where $38 takes us from the end of the handle, which we've now broken off of, it takes us in the neighborhood of that $60 to $62 range. Now, don't get me wrong, no one's sitting here saying silver's going to $62 before the end of the year. What we are highlighting, though, is that while the next move for silver, according to TD Securities for next year, looks like it's $42.47, ultimately, we believe this rally could take silver in the range of $60 to $62 when it's all said and done. Now, important to note as well, the gold to silver ratio. This is one of the most important tools that you can know when you're taking a look at what precious metals to buy, right? If you've decided, hey, I want to allocate a portion of my portfolio to gold and silver, but you don't know what to buy, gold to silver ratio is your number one tool. Now, simple. All it is the price of gold divided by the price of silver, okay? And this ratio over the 20th century averaged roughly 40 to 1. It's averaged somewhere closer of 45 or 50 to 1 for the 21st century. And one other thing that I would like to highlight is in 2011, the last time we saw a massive rally like what we're entering into today, the ratio closed as tight as 14 to 1. So as we're all sitting here today, the ratio is currently hovering around 81.25 to 1. And so historically speaking, every time the ratio is wider than 80 to 1, silver typically outperforms gold 4.5% for every 1% that gold does. Real simple, but really important. Now, again, moving forward, some of this is allocation strategy. This comes from a 50-year CPM group study. And what it shows is over a period of 50 years, what was the number one allocation strategy, not just during turbulent markets, but during markets that were thriving, okay? And what they established over the 50 years from 1968 until 2018 is that a portfolio that has 25% precious metals and 75% other investments, and when we're talking other investments, they're saying split between stocks and bonds and cash, that 25% outperformed all other allocation strategies across the market through that 50-year period. And again, this is not just in the bad times, this is also in the good. Now, an aggressive investor that you'll see has a 10% allocation in precious metals. They deem an aggressive investor as somebody who has roughly 6 to 7 streams of income. And then they give the example of Ray Dalio here on the far right. Ray Dalio, for those of you who don't know, is the founder of Bridgewater, the largest hedge fund in the world. He personally holds 7.5% of his funds in precious metals, and that's his allocation. And what you'll notice is some people, this is a huge awakening to them when they see a 25% precious metals allocation. But you'll notice this allocation strategy that CPM Group pointed out for a quote unquote permanent portfolio over the years is actually a significantly lower allocation strategy than what Bank of America is recommending right now. If you remember from a few slides ago, Bank of America is actually recommending 40% allocation into commodities and precious metals right now. Now, just to expand on why 25% is the case, I have this chart here. It's risk versus reward, okay? And the way to interpret this, when we're looking at risk, we are not talking about the risk of losing money by investing in gold. The risk percentage here is quoted as the risk of losing out on higher returns from more speculative investments. And so as you look on the graph, you'll note somebody who had 70% of their portfolio in precious metals, specifically in gold, as opposed to 25%, actually yielded a higher profit. On average, they returned 9.3% a year over a 50-year period. However, they deemed holding between 25 and 30% as a sweet spot because you are not losing out on the opportunities of some of the riskier, more speculative investments. Now, again, just as we wrap up here in our segment of things, don't hesitate to give us a call. The number one thing I would say is we really emphasize financial literacy and education. And what we're here to do is to show you not only what the charts are saying, but how to set yourself up in a way that you're protected for all market situations moving forward. And as I said at the beginning of the webinar, and I'll say it again right now, if you take anything away from this webinar, the 3 major points I'd like to get across. Number 1, do not buy collector coins. I would stay away from coins as a whole. We're looking to purchase physical bullion bars, investor bars. These are 100-ounce, kilogram, and 10-ounce bars. You're not going to get stuck paying high premiums like these coins that we're seeing people pay 70 and up to 100% in some cases premium on these coins. Number 2 is, remember, the number 1 thing that affects the value of gold and silver is the US dollar. They share an inverse relationship. And as the dollar loses value with interest rates being cut here, we're going to see the price in gold and silver go up. And the third thing I would urge everyone here is, no matter what, we should make sure that we make our investment decisions based on facts and not emotion. And so if you're ever looking for a review or you have questions on precious metals and you want to see what the charts say, if the charts back up your hunch, don't hesitate to give us a call. We're very happy to speak with you and help you out. The number that you'll see here on the screen is my desk line here at the office, or you can email me directly as well. And anyone that mentions the Advanta webinar today when they call in will receive a discount on their first purchase.
Good deal. Yeah, Greg, thanks for great presentation. As always, great information, I think, for everyone who's listening to take away to, review their portfolio, whether they have gold or silver already in the portfolio, whether it's something they're looking to add. Really good information. And for those of you who, again, are listening live to the presentation, we have a few minutes left here. If you have any questions, please type those into the question box on the screen. We'll make sure we get them answered. Greg, just wanted to throw out one or two of my own while we wait for other give people a chance to get their questions typed in. Obviously, a lot of the experts kind of seems to be going in the same direction, the same line of thought. What are maybe some things that in your experience or in history have popped up where maybe the conventional wisdom ends up being wrong, not because that they have poor models, but maybe something else happened in the world or in the United States that then said, oh, nope, change our line of thinking now. That might now go the other way or may stay steady. What are some things people could be on the lookout for there?
For sure. And it's a great question. I think one of the big things that we have to keep in mind is, although regardless of the election, it seems monetary policy is moving in one direction, and that's lower interest rates. There are a lot of global factors right now that are elevated that are contributing to the precious metals price. One of those is geopolitical tensions, right? We have multiple wars going on around the world right now. And so that is to say, if we were to get announcements later this week saying there's peace in Russia, Ukraine, the conflicts in the Middle East with Israel are resolved and everything's hunky-dory, short term, you would see a little bit of a shave off in precious metals price. Ultimately, that's not going to affect their trajectory long term as rates come down and the dollar devalues, but those are factors outside of our control. Now, I mean, if we look at the situation over there, as much as I would love world peace, I don't necessarily know that that's something that will be resolved overnight. But it's 100% something that is factored into the price of precious metals right now.
Okay. Someone asked a question, so what is the discount percentage for Advanta? I don't know if you want to share that or not, but I also want to make sure that's not something that Advanta has anything to do with. That's just Greg being generous and offering that. But someone asked what the discount percentage is, I guess. And then also someone asked, do you have a minimum investment amount for gold or silver?
Both are great questions. Discount amount is product specific. And obviously that changes depending on the product. What I can tell you is no matter who the client is coming from Advanta, specifically on the first purchase, we make sure that we're covering your Advanta fees for at minimum the first year on top of said discount. As far as the purchase minimum question, we do not have a minimum purchase requirement. And to give you an idea, I know it's not IRA specific, but we even service clients with a subscription program with as little as, $40 a month. So it's not something, don't feel you need to have, millions of dollars to get involved in precious metals. There is no minimum to get involved, and we try to make it open to everyone and anyone who wants to do this.
Yep. Thanks, Greg. Another good question. Someone asked, as I understand, we are buying actual metals and not paper for owning metals. That's correct, absolutely. And that follow-up was, can we pick up the metals and hold them ourselves? And again, if you're using your IRA account, the IRS rules prohibit you from personally holding them, whether it's in your own safe, whether it's in a safety deposit box that you have control over. The IRS does expect that it's going to be a third party that holds those metals. I mentioned we work with 7 or 8. Greg mentioned, specifically IDS of Texas. There's a couple different depositories where the metals, you basically have a storage account in the name of your IRA. You buy the metals, they're shipped there. When you want to then sell them, you want to take a distribution, we can move the metals at that point. So,
but just to touch on what you're saying too, Scott, one thing to note is while you can't hold possession of it, one thing that we have done with Advanta clients before, and I talked about it with an Advanta client today, is you can do an audit of the storage account, and you can actually go to the depository. They will book you a half-hour appointment. You can go through each bar or each coin or whichever you have sitting in the facility, and you can hold it in your own hand. You can take pictures. You're just not allowed to take it out of the facility, as Scott was saying. One thing, and I do note, although these facilities are all accredited, it is really cool to get the chance to go and to see it. So the only thing that prevents you from doing that is physically getting there. And in our case, talking about IDS, it's Texas or Delaware, but they do offer the service audits if you'd like to get to audit your metal that's in the IRA.
Right. And to follow up, I was going to say this, and the individual said it as well. Like, you may, if you want to hold them yourself and you're not buying through an IRA, absolutely. They're not going to be any laws or rules preventing you. So that is an IRA specific situation when you're buying the metals through your retirement account. Another question, Greg, for you: can the products be resold? So you buy the metals, storing them whether IRA or not. Can you resell them? And I guess maybe Greg, you can cover what the options someone might have for disposition, whether they're selling them to third parties. Do you all ever buy them back? Kind of maybe go over the options you have there.
Yeah, that's a great point. So yes, they can be. I would say in the case of our customers, I have always purchased back all the products from our customers just because it's been easiest. At the end of the day, if you have product even from someone else that you purchased us from, we will offer to purchase it back if it's physical precious metals. And we do buy back at individuals. We're not talking about paying a huge premium and you have people buying it at a discount, like if you went to a pawn shop, right? We're buying it at market prices. Now, that does not stop you. You're allowed to sell these to whomever you want out of the IRA. The primary thing is you need to make sure that you're liquid, and so we facilitate those transactions as quickly and easily as possible for all the customers. Simply put, when it comes to selling in an IRA, it's a DocuSign with Advanta. It's a sales or return of investment form along with a metal movement form for the depository. And as soon as the metals are moved out of your vault, then funds will change hands and the position will be liquidated. If you were to do it outside of an IRA, it's dependent on whether you have physical possession of it or it's already at the vault. If it's already at the vault, super easy. If you have physical possession of it, though, it does require shipping it to the facility to be able to liquidate it if it's outside an IRA. But as far as that goes, we do liquidate. We can buy everything back. There are no issues as to liquidity there. And Dillon Gage, who I cited that we're a registered dealer with, they are a liquidity partner. So we're not just talking about, buying back in small chunks like a few $1,000s here, a few $1,000s there. We're able to buy back in excess of 8 figures, 9 figures at a time. So there's no concerns there.
All right, Greg, we have one last question and we'll end the webinar. Someone, this is I think good question to end on too, but someone said, do you recommend the sale, basically selling your gold or silver when the US dollar increases in value to keep the profit? Does that go back to the IRA account? Now, to answer the second part, I'll take that. If you do sell the gold within your IRA account or the silver within your IRA, yes, the proceeds for that sale do come back into your IRA account as your IRA account as the actual owner. But what is your recommendation, Greg, as far as selling versus holding for further? And I guess sometimes maybe that's a personal decision, but kind of give us your thoughts on that, and we'll conclude the webinar.
Yeah, I think there's always a good time. Like, keep in mind, no one wants to be greedy, and there can always be a good time to take profit, right? When I enter into an investment, and I know with all of our customers, we will set price targets. When we hit those targets, we don't get emotional about it, right? You take profit where you can. The big thing, and what I would caution you with precious metals, is at the end of the day, if every time the dollar spikes a little bit, you want to sell, take profit, that's more like trading a futures contract. With physical metal, while you could do that, at the end of the day, I wouldn't personally recommend it because we're buying physical metals based off of what we're seeing on the charts, and these are longer term holds. The positions we're entering into right now, I firmly believe these positions aren't going to be changing within the next 6 months to a year in terms of how I'm allocating to those positions. But I will say, as the market moves up, allocation strategy changes like anything else. And so we have a lot of clients that trade their accounts, for instance, that take profit in silver and move the profit into gold and vice versa, right? It's always a good day when you can take some profit and make money. And I think a big thing that's important to keep in mind is to strip the emotion out of it, right? As the market goes up, once you hit your price target, take some profit. It's never a bad thing, right? You don't want to get greedy and get caught holding on.
Yep. Great finishing thoughts, Greg. Again, appreciate you coming on as always, sharing your expertise, sharing your knowledge with us. Thank you all of those to people who listen live to the webinar. Again, if you listen to the recorded version, Greg's information right here on the screen. Follow up with him. The questions that you weren't able to ask live, ask him by giving me a call, shooting him an email as well. If you have questions for me, you can reach me here at my number. Or my email address if you have questions on the IRA side of things and what that looks like from the IRA perspective of purchasing precious metals. But again, Greg, thank you so much for coming on with us.
Yeah, thanks again for having me, Scott. Always a great time. And thanks to everyone who joined and asked questions. There were some really great questions today, too.
All right, good deal. All right, thanks everybody again for attending. We'll look forward to seeing you on our next event.